Hello, ladies and gentlemen. Welcome to the next webinar of Forex learning. And this webinar is all we know the secret code of candlestick. How can we use the candlestick to analyze the market very well? So for our first webinar, which was the understanding of Forex market and MT5 platform, and this is the second series of the webinar, and here we'll be talking more about the technical analysis as we are stepping inside the Forex market. So we'll be now going further and understanding the market, and which requires very good understanding of the technical analysis, chart analysis. And as we all know, whenever we want to trade, we have to look after the charts, which is the main source to check the market conditions, the market outlook. Apart from that, as we talked in the previous webinar, that if we want to go inside the market, so we have to first understand the market environment. So candlestick can play a vital role to understand the market environment. It has an ability to understand the market with the sentimental and the technical way, and with the help of little bit knowledge we can make a good understanding in the candlestick pattern to make the market environment more clear for us. So going further, how to analyze a chart. So if we want to understand the market, first thing first, there are three main legs of a market. So overall market consists of a fundamental overview. This is fundamental, which includes the market economical data, the countries. As we all know, the Forex market has currency, which is the currency itself is the instrument in the Forex market. If we talk about any other financial market, so whatever the whatever the fundamentals which the country or the, if we're talking about the company stocks, then whatever the fundamentals of the stocks or company is available, that analysis, that pre-entering market analysis come under fundamental. Then the sentimental is the second most important analysis, which includes the news analysis or something related to the news which gonna become in over some time, and the market is talking too much about that news. So this will be coming under the sentimental group. And the third and most important is the technical analysis, which is helpful to make the entry and exit from the Forex market or any kind of financial market. And also at the same time, we have to make understanding of all the three fundamental, sentimental, and technical analysis chart. So going further, if we are want to understand this market, then it is always a good opportunity to see the market through a candlestick patterns. So the basic fact about this market is market will be 80% of the time market will be in a ranging condition. Market will be ranging between the two price level. The price level could be horizontal, so it will be called as the horizontal channel. The price level could be inclined, either upside or downside. So market price will be consolidating between this price level. A market channel can be decline. So incline, decline, these three possibility of the market could be, but the 80% of the time market will be in a ranging condition. When we increase the time frame of our MT5, then we get to know that the price is actually consolidating between a price range, and it could be incline, decline, or horizontal way. So yes, but the very few time it will be changing the trend, and which is most important time for the entry. Or if the market is not showing the change in the trend, then also it is a very important, because we have to take the entry there itself to capture the movement of the market. if we assume that the market is came here and it has two direction, could be upside or downside. So if the market is not going to break, if it is not in the 10% of the time, market will be going down further. So either we have to understand the market has the right now market change trending, or uh, market same way direction trending. So this is a very much important, and this data can be actually tracked by the candlestick patterns. So this is a very good market analyzing tool. Candlestick patterns are really good tools to understand the market scenario, the market good entry and exit as well. So going further, now there are also other approach to understand the market. There can be the fundamental approach, there can be a sentimental approach, but you need to be very much experienced to get this fundamental and sentimental approach to find out the market entry, because this requires lots of knowledge, lots of data about the macro and micro, analysis of a country or economy, which is directly linked with the currency. The something happened to the economy, it directly affect the currency. Like we know, Turkish lira was crashed because of US and Turkey. Dispute was overall create a sentimental in the market, which was not good for the market, and which directly hit the market conditions. So this was the sentimental, and this was a very good sentimental example for the market. And there are some other fundamental example as well, like AUD GDP report is in this year, if we see, was very weak in this last quarter, from October to December. So it was very much down. So because of that, AUD hit very badly. So this was a very good example for the fundamental way and fundamental analysis. So yes, we have to get our experience growing for understanding this two way. But yes, we can understand the technical way very well, and as a beginner we will be focusing on the technical way. Further, we'll be making more advanced webinar for you to understand this market completely, and going further we'll be having more good strategies to share you, so you could trace this market, you could analyze the market very well, and you could make your entry and exit from the market at a good time. So going further, now let's let's talk what is a candlestick. So candlestick is a smiley for the market. Candlestick are a very good data which was discovered by the Japanese rice traders in the late 1940s. They was using the candlestick patterns to understand the rice price, whether it will be falling or it will be rising. So this was discovered, and it is a very good smiley for the market. And if you see the candlestick, it has four parts. The first part where the market, it has a opening, so it will be considered as the open price of the market, where it will be showing as the open price for the market. Going further, so there will be a closing price of the market, and this 2 week which you can see both the sides. So these weeks are high and lows of the market. It show actually the market was how much fluctuate between a particular time interval. The time interval could be very, it depends on how much time frame we had choose for the understanding of the chart. So it can be any time frame. If you're using MT5, it's an advanced version of MT4. So it has a multiple time frame facility to choose. It can be 1 hour, 1 minute, or 1 week, or even 1 month. So if we see in a 1 month basis, it will be huge chart to understand the market. So but all has of every one candle will be belonging to one candlestick time frame. So one candle will be belonging to the time frame which we had chosen. So there will be a second type which will be opposite of this bullish candle, which will be a bearish candle. If a price rise, If a price rise from where the market has opened, so it will be turning into a green candle. When a price fall where the market has opened, it will be turning into a red candle, which will be called as the bearish candle. So the price of high and low gonna be the same as the previous in a bullish candle. So now, this is a very good sentimental analysis tool as well. Basically, as I told, it is a sentimental analysis tool. So we can find out how can it help us to understand the sentimental of the market. So before going further, we have to understand that in any kind of financial market, there is a tug of war going on between a buyer and a seller. So this tug of war actually leads the market. So majority people leads the market, and the minority people always struggle. If we see the market has a majority of buyers, so market will be start going upside. Where the market has a majority of sellers, so market will be start falling. So this actually is sentimental, run the market very well. So now we have to understand how can we find out whether the market has which side domination. So exactly, I will help you to find out this. So if we see a candle when it is forming, when it is start forming, when a new time frame start, it will be a very baby candle which doesn't have any body, any wick. So it just started, the price has started. Now price have to see which side I have to go. So let's assume price has gone up, price has gone up in a bullish candle. So the market, where the market has opened, it doesn't have any motion, market opening is opening. But when the market opening, the price is falling down, the price is going down, it become a greed for the market feel very less price for this financial instrument, and they start buying that product. If we see in a time frame of one day candlestick, so the price will be showing price when it's falling, it's turning to red. So this price will be a confidence for the market, and market greed will be rising. The market will be entering for the buy position. When the price start rising, the more buyers start entering in the market. So the market price when it start going very much up, so there a fear start generating inside the market. The people think it is now is a good price to exit the market. We are getting a good price to exit the market, and there the fear works, which leads the market down. And there a confidence price comes where the market actually exit and the new candlestick start. So this is a very good emotions of the market, and if we understand this emotion of the market, then we can exactly do what we want to. We can decide when we have to enter, and we can decide with the help of candlestick when we should exit from the market. So going further in a long term discussion for this candlestick pattern, so we will be finding out now what are the types of candlestick, and we will be talking the three class of candlestick patterns. One will be single candlestick patterns, second one will be the dual candlestick patterns, and the third one will be the triple candlestick pattern, which will be a pattern formed by three candlesticks at a place. And this will be helping us to find out market bullish or bearish condition. So let's talk one by one and going further, and we will be also looking the exact result in our Amplify platform, where we'll be seeing the market actually is it follow or not. So let's go ahead and see the first our single candlestick patterns. So we have spinning top, Marubozu, dozy, hammer or hanging man, they are both same, and inverted and shooting star, the same and opposite version of the hammer and hanging man. So going further one by one, we'll be starting from the spinning top. So spinning top is a candlestick pattern which is formed by a small body, a small rectangular body, but the wick of the bullish or bearish will be equally same distance on the both the sides. And it is really finding in the market, this candlestick finds very rarely in the market, it generates very rarely, and it has a tendency to reverse the market trend for the short term. So wherever it is generating, it is creating a market. It is generating a market. Changing environment, market gonna be change the trend for a short term. So let's see in our platform whether it really works or not. So here we'll be talking our platform. So this is our MT5 platform. So once we press Control plus M, so we can actually hide this right now. And this is our platform MT5. So let's find out our candlestick which we was talking about. So let's see if we find a spinning top, and we can find out our okay. So for the more you practice your eyes to find out this candlestick in the market, the more you will be a good trader. So as we can see here, market has a spinning top exactly here. So let's zoom out this candle and let's see. So if we see here, so it's not a good example of the candlestick spinning top. Let's take a good classic example of spinning top. So here we can see one. Okay, no. So okay, it's going up. We have to go close. It's going front. So we have to close that, and then we can go ahead and see some market changing conditions. So as we can see here, this could be a good example. So it don't change for the long term, it changed for the short term. So what we can see here, market was chasing a downside. When the spinning top start, market somewhat chased the upside, and market has then again reversed back, but again market has gone up. So the candlestick is showing actually a emotion of the market, of war between the buyers and sellers, a tug of war which is going on exactly inside the market. And it show and do exactly what it is meant for. It show every emotions for the market. If we see what is the next price, the candle has opened, so we can find out the long term as well for the market. So this was an example for the spinning top. And if we find out any bearish side as well, let's see, just train our eyes. Let's see if we are finding in a real chart where the market is running as well. So yes, so this gonna be a good example over here. Okay, so this will be a good example over here. So market was chasing upside. When it appeared market has shown little bit downside, but for the short term it has shown, and market again followed the long term trend. So it's good for the scalping trend. If we are a good scalper, we can take it as an opportunity for the training top to scalp the market in a very way. So going further in our next candlestick pattern, so our next candlestick pattern is Marubozu. So Marubozu is one of the favorite. Marubozu is exactly a rectangular which doesn't have any weak upside or downside. If we see the market, any candlestick, we will be finding a weak upside and downside, or either other any other one side. But in Marubozu is a perfect rectangular body of candlestick which doesn't have wick, and it show the market continuation. It has a market continuation trend. And it is if we see the sentimentally, market is very much confidence about the price. Where the market has opened, it has a confidence. That where the market is closing, it has a confidence. It doesn't have rising a fear which we saw in the emotion chart. It doesn't have any fear. Market is very much confidence with the close price. It is the open price as it is a bearish candle, and it is the close price. So market has exactly no fair point arising. So market has a very much confidence for the price which is going on inside the market. That's why it is a continuing type of chart pattern. Let's find out it in our real market, and we see if this chart can help us to understand the market. So this is our Amplify platform, and we're trying to find out the Marubozo. So we have to, as I told, we have to train our eyes to find the Marubozo. So I had found a Marubozo over here. So this is a Marubozo bearish one, and exactly what it has meant for it has did the same. It has continued the trend. It was falling, and it has showed the same trend for the couple of time. So this candlestick is 1 hour. So each candle is belongs to 1 hour time frame. So let's see how much time it has fall. So one, two, and three. So continuously it has followed a 3 hour falling. And if you want to see how much it has fall exactly, so we have to find out. Press Control plus F in your Amplify platform, and if you make an entry over here, we can see exactly, if we see the confidence point, so 34 pips still it has fall. If we see it in a long large time frame like 4 hour, if we find this pattern, so it will be good for the entry because you can continue this for the long term. And yes, this market is somewhat depends on every aspects, not only the candlestick formation. It has other tools as well, we had seen in the beginning. So of course we have to learn the whole concept of forex market. You can't only sustain over the technical analysis, it is just a one part. So other also factors are there which is controlling the market, like news or the fundamental part which we was talk about in beginning. So this all also required to understand, but the technical we understand to make our entry possible. So if we see here, one more Marubozo I had found here. So if we this Marubozo also had shown a little bit continuation of the in the market trend. So if we see here how much market has fall, if we enter over here, so market has fall another 24 pips or 19 pips it has exactly fall. So after that market has changed the trend. So this was a example for the Marubozo candle, which help us and which is an example of continuation of the market trend. So now let's go further in our next candlestick pattern, and we are finding here dozy, and which is a highly important candlestick pattern. Dozy is a highly important candlestick because it reverses the market, and it is very sentimental candle. If it arise in the market react very quickly. And doji is actually a four types. One is gonna be neutral. So how the doji formation will be, so there will be a flat kind of body of candlestick, and the wicks will be both side, both long list side or just one side. It can be either upside or downside. So everyone has a different name. When it is a equal and small wick both the side, it will be called as a neutral. If it is a long lace both the side, it will be called as a long lace doji. If it has a upside wick on the head side, it will be called as the gravestone. Whereas if it has a tail side wick, so it will be called as a dragonfly. Now it is a strong market reversal condition, but it depends where it is actually arising. So the natural concept between the neutral and long range is the neutral one show the market uncertainty, but still market will be trying to change the pattern for the short term. Okay, now when the long range doji is arising in the market, so it will be changing the market scenario. But the suggestion is don't enter inside the market because the market itself is very much confused for the market trend. It can be a upside or it can be a downside, but no one knows because the long list doji is a highly uncertainty condition of the market. If it is arising inside the market, so long-term outlook is a very much doubtful. So it is suggestion that don't enter inside the market. Now the other side is gravestone. Gravestone is a very good candlestick and dozy pattern. So it is shows that the market has a very much market has tried to go upside, but how much it has tried to go upside, the sellers has pull the more down, and seller has become dominated inside the market, and this week has arisen and the market has exactly closed where it was open. The price has become fair for the buyers, and they exit at the same entry price, and this kind of gravestone doji has formed. So it is a strong reversal downside candlestick pattern, whereas the dragonfly is same opposite of the gravestone, where the buyers was trying to push the sorry sellers was trying to push the price bottom side, but suddenly the buyers has entered, and the more seller was pushed down, the buyer has more pull this price up, and exactly the seller has exit at the entry price and came out of the market in a fair. So it become a strong long lace downside week, and which shows the market has now gonna be the upside direction. So this was a highly important market situation candlestick, and let's find out now in a real market how can it help us. So let's find a dozy here, and I exactly had find out here dozy. So if we see here, okay, where it's gone. Okay, now you can see here, it is a example of a dozy. So or we can see here right now. So we can see price was falling. Let's change the color. So price was falling, and a buyer has suddenly entered, and the list has come downside. But the more seller was trying to pull it downside, the more buyer has actually pushed the market up, and the market has gone long term up. And it is 4 hour candlestick, so we can actually find out how much candle uh, has how much time interval the price has gone up. So exactly we can find out here 11 bars into multiply by 4 hour each bar. So exactly 10 bars into 4, it exactly 40 hours market has gone up, and 900 pips, almost 94 pips almost market has gone up. So this is a highly important candle. So if we see here another dozy which has a long ledge bottom side, if we can see market was falling, but here the price was going down as well. The more price was pushing down with the seller domination of seller, the new buyers has enter, and the more they had push it upside, and in a fair sellers has leave the market on an entry price, and here the price has gone all the way up. So this is a very good candlestick pattern to exactly find the market reversal. You can see over here as well, the price was going upside, but seller has actually entered and pushed the price downside. The another week has arise here, which pushed the market downside. And don't forget, we are in a 4 hour candlestick pattern. So if we can see here how much price was fall, if we make an entry over here, so price was exactly gone up opposite side 3 pips, but price has fallen 10 pips almost, and then the price has again changed the direction and gone upside. So yes, there are other factors also which is affecting the market, so we should not even it is a good trend, we should follow the risk management properly. Okay, so we'll be talking about the risk management later on. So let's go further and find out the another candlestick patterns, which is hammer and hanging man. So hammer is candlestick pattern which is designed by a rectangular body and a long lace tail, which should be 2.5 or more than that times larger than the body. The length should be 2.5 times larger of the body, and small rectangular body should be forming. There should be no wick or very little wick on the head. So this will be considered as a hammer. So what is the behavior of the hammer? So it will reverse the market trend. Now let's understand in a different way how can it reverse the market. So as you know, there is a tug of war is going on inside the market. If we see here, the more price was going downside, the seller was actually leading the market and they was pushing it downside. Now new buyers enter and they actually push the market all the way upside, but not much they had strength, and then it was somehow closed here. So it was okay, it is a bullish candle. So yes, they has much tendency, so they had push all the way up, they had push up all the way and close here. This is the close price because it is a bullish candle, so this is the close price for the market. So here the price has actually crossed the opening price and market has crossed above, so it will be a strong upside for the market condition. Whereas if it is a if it is a uptrend and the price has closed above the opening price, it will be a strong indication of the buyers is in a very strong condition inside the market. Now, if we see here the bearish candle, and the price was actually trying to go up but still not able to go, and price somehow closed in the bottom of the opening price. So there is a little bit still the seller is stronger inside the market, and this will be another factor that the price could be go a little bit up, but still the seller is strong inside the market. So this is a sentimental analysis of the market we can find out with the candlestick pattern. So let's see our MT5 and let's see try to figure out this uh, our hammer and hanging man. So if the candle is creating on the a downtrend, if a candle is creating, so it will be called as a hammer. If it is creating on an uptrend, so it will be called as a hanging man. Both has the same pattern, both have a rectangular body and 2.5 types of long tail, but it depends where it is forming. So if we can find out a good classical example of hammer or hanging man, so it will be good. So let's find out. So here exactly we can find out a hammer, which is, you can see over here, it is a hammer. So price was falling, 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 and here the more price has tried to pull down, but the new buyer has entered the market, and they start actually controlling over the market, and they start pushing the price upside. And you can see the buyers has actually again enter, and here a more classical hammer with a long list has been created, which is a strong bullish condition. So market has gone for the long term bullish. This is a long term bullish condition of the market. If we can use a volume indicator also as well, so it will be in a next webinar. We will covering some other webinar with the help of volume and candlestick pattern to understand where the market gonna be going for the long term or short term, so we can actually find out. So we'll be making a more advanced webinar. Also, we have a pro level webinars on Monday, Tuesday to find out the market and technical analysis and what gonna be news releasing every week. So we have a total of 4 webinar in a week from ABFX to find out to learn this market as well, find out and learn this market. Now let's going further and finding a hanging man kind of candlestick pattern. So let's see, it should be in a uptrend, and let's try to find out any hanging man. So still we didn't get. Okay, now, so the only thing you have to do is training your eyes. The more you train your eyes, you can capture it by looking the chart. All the candlestick, every candle is creating with a pattern. So you more you practice and train your eyes, you can actually find out the more patterns for a nice entry and exit. So let's find out any hanging man. And so yes, we are not finding here. So let's change the chart and see in other chart if we find out any hanging man. So this is GBP USD for our chart, and yes, we find out little bit here hanging man. So price was chasing upside, little bit hanging man has created here, and price has fall the downtrend. So of course it is 4 hour candle. So each candle belongs to 4 hours. So we can check actually how much candlestick has fall. So this is a good classical example for the entry and exit with the candlestick pattern. And more you practice this, more you become perfect. So let's going further with our next candlestick patterns. So before the hanging man, there is also other candlestick patterns, which is like reverse of hanging man, which will be called as the inverted hammer or a shooting star, where the same thing will be in a opposite direction. So there will be the body and there will be the wick, and there will be the body. Hmm, okay, it is this. So there will be the body and here will be the wick. So if we see the sentimental analysis of this type of inverted hammer or shooting star, by the way, if it is creating on an uptrend, it will be called as a shooting star. If it is in a downtrend, it will be called as the inverted hammer. So it is also a reversing kind of market situation. The more price was trying to push down with the sellers, the buyers enter and they actually pull the price all the way up, 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 but they was not able to pull more up, and the price finally little bit closed down because the the sellers start exiting the market. They understand the buyers has enter and exactly they're going to pull the market all the way up, so they start exiting, and this become a bullish kind of inverted hammer. Whereas if the price has fall down more than the opening price, it will be a high sentimental for the market. So it will be then couple of candle will be still showing weak, but it will be a long-term buy trend. Or if it is generating in a upper trend, if it is generating in a upside, so it will be actually, of course it will be generating in a upside. That's why it will be called as the shooting star. So it can be either this or it can be either bearish candle. Whoever is generating an uptrend, it will be called as the shooting star. If it is generating in a uptrend, so that means the seller is now entering inside the market. They has actually crossed the opening price and they has pulled down the price of the instrument, and it is a strong reversal condition for the market gonna be following this for the long term. So this is the inverted hammer and a shooting star. So now we had completed our uh, single type of candlestick pattern. Now going further, and let's take important double candlestick pattern to understand the market. So whatever the important one is bullish and bearish L figuring, bullish and bearish kicker, bullish and bearish harami, and the other one is piercing pattern and dark cloud. So let's going further and see one by one each of them. So first is the bullish and bearish L figuring. So what will be the exactly designing of this bullish and bearish L figuring? So it is actually a market short-term changes indication. If a candle is falling, 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 and the second candle has exactly opened where the last bearish candle has formed, and it has crossed the body of the previous candle and close above the body of the previous candle, it will be considered as bullish and bearish. It will be considered as a bullish L figuring, and it has a tendency to change the market. Whereas if the price was in an uptrend and the second bearish candle has formed where the price was open the same, the price has the closing candle price has opened and it has crossed the body of the previous candle and closed the bottom of the previous candle body, it will be considered as a bearish L figuring. It will be changing the market trend for the short term. Let's check this in the candlestick. Let's check this in our MT5 platform, this candlesticks. So we have to remember Yes, so we had found a bearish L figuring where the price was chasing little bit up, and more classical is here the example. So as you can see here is a inverted hammer, plus it is another candle is bearish alpha green. Both are exactly came in the same picture, so it become a high sentiment for the market, that market gonna be changed the high probability trade, it become market gonna be changed the trend. So if we see here the price, where the price was close exactly the same price, market has again opened and a bearish candle has generated, which has actually crossed and closed below the previous one body. So it has changed the trend for the long term, but it will be it can be continue for the long term, and it can continue for the short term as well, so we have to careful about this. Now, let's see some another classic example for our bullish figuring. If we find out, so yes, we had found out over here. So a bearish candle was generating, whereas a different bullish candle, which exactly started on the same price but closed above the previous one body, and market has continued for the short term. If we expand this chart into a 1 hour or 15-minute time frame, so we can see a market has tried to chase very good candle formation was happened, and the price has much fluctuated inside that time frame. So if we compress the chart in a 4 hours, so it will be showing the market has moved little bit upside. So yes, this is a multiple time frame analysis of the market. We will be covering this as well in another webinars. So it is also a good tool to analyze the market. So this was a classical example for the bullish and bearish L triggering. And now we'll be going further with our different candlestick pattern, which is bullish and bearish kicker. So bullish and bearish kicker, it is actually generate more in the stocks or indexes where the market has much gaps. So in a forex market, only the gaps will be generating during the weekends when the market close on the Friday and open again on the Monday. Then it will be actually generating a gap. But between that, there will be no such gaps generating in the forex market. But when we see some other market like stock market or indexes, there will be a huge gap generating. So this candlestick help us to find out the bullish and bearish outlook in some stocks or other kind of indexes where the opening and the closing price happen every day. So what is the pattern of this guy for candlestick? So market will be in a downtrend, and the first one candle will be a bearish candle, the second one will be also a bearish candle but little bit down of the previous candle, and the next candle should be open above the price of the previous candle, and it should close and complete the body of the previous candle. It will be called as the bullish kicker. If it is a bearish kicker, so how it will be actually, the market should be in an uptrend, and the first candle will be a bullish candle, whereas the second will be bullish above the previous candle head, and a next candle will be generating below the price of the bullish candle and should cross the body of the previous candle trends. So it will be considered as a bearish kicker. So it has a tendency to change the market. Let's find out in our MT5 whether it works or not, and let's see. So as I told, it will be working in kind of, you can see here gap down. So it is a weekend when the market has opened in the next week, so there will be a gap in a forex market. But you can see here the forex in usually forex market doesn't have gap, the price more, because the forex market has huge liquidity, so it doesn't create any gaps. But in a weekend, when the market is open, so it will be exactly creating a gaps. Now for understanding this, let's find out some stocks. So we'll be taking UK 100 index, and let's see, because here will be lots of gap. So this can be a good example of our, no, it cannot. Let's find a classical example. And Yes. So it should be, yeah, we find out, no, exactly not. Huh, here we find out. So the price has actually, the downtrend was going on. The previous first candle is here. The second one is exactly here. Let's make it small. Yeah. So the second one is here. And the third one has opened above the previous candle and it is a bullish candle. And the price has gone more way up, 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 up. So this was a classical example of the bullish kicker. Like similarly, we can train our eyes and we can exactly find out the bearish kicker if we find out here in this market. So we will be going further with our different candlestick locks we have to cover still. So let's go ahead and find our different candlestick. So this is another candlestick which is highly popular and which is really works in the market. So bullish and bearish army. This candlestick is got named by Japanese people. Japanese people say uh, a pregnant lady. So this is a pregnant lady in a Japanese word. So when the pregnant lady have a baby, so this is exactly considered as that same scenario. So a baby candle has generated over a large body volume, and when this body, the baby candle generate in a bullish candle, so it shows a long uptrend. If in a uptrend, it if after a large volume, a small baby bearish candle generate, it shows a highly downtrend. So this candlestick is very easy but rarely find in the market. So let's find out, and it is cover a long-term distance for the market. So let's find out this in our market MT5, and if we could find this. So uh, let's continue again with our Forex chart. So here is Euro USD pack, and we'll be trying to find our bullish and bearish haram candles. So let's see if we find out one. Okay, a large drop and a baby candle should be generating. So uh, if we can see here now, so it should be very classical example. So it will be good to understand. And okay, so we didn't get here in this Euro USD chart. So we can either go with some other chart or we can little bit more hunt for this candlestick pattern if we found in the historical data. So yes, we are not finding that. Let's go ahead and choose some other currency pair like GBP USD. Let's see here if we hunt this we found this candlestick pattern. So So the only thing you have to do is training your eyes. The more you train your eyes, the more you become a perfect trader. And here we found not a classical example, but somehow we found this candle. So it is also in hammer because it has a long ledge. So it is not a classical example. If we found a classical example, it will be good. So let's see if we found one. So you can see here we had found a Marubozu as well. So yes, if you are finding some other candle, you have to keep in a mind that you can find out, or you have to challenge yourself what candle I am finding in at a glance in this particular chart, which we can see here from in this chart screen, which candles you find out. You have to practice it, and then the more you practice, the more you become a good analyst for this currency market. So yes, some candles which are really to find, sometimes we can find out easily, but sometimes it hard to find inside the market. But once it generates, it moves, it eject the market very quickly. And yes, this one is right now not, we can't find out. So exactly we find out little bit here. So market was falling, a baby candle has generated here, and the market has gone up. up, 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 up. So this was a classical example of bullish candle. There could be a bearish as well, but we have to find out this is a really seen candlestick formation. So yes, so we'll be continuing further with our another patterns. Now the other pattern which Now, the other pattern which we will be talking about is a piercing pattern. So, piercing pattern is a different kind of pattern which is similarly kind of a kicker, but it has some different. So, let's see. If a price was in a long downtrend, a bearish candle which has been open with the previous close little bit downside, and it has crossed and closed above the previous candle body, and it has closed the previous body, and this will be called as a piercing pattern, which is a very strong pattern, and it will completely try to reverse the market for the long term. So piercing pattern is very helpful for working the market for the long term, and the opposite of this will be called as a dark cloud. If it is generating an opposite bullish trend, if the market is very much bullish and this trend is generating the market has a bullish, let's draw this and figure out. So let's assume this is a bullish candle, and if a red candle which is generating with a little bit shift, this is the market open price, this is the close price because it's a bullish candle. But a new candle which is little bit upside open but actually came down, all the way came down, and actually it has crossed the body of the previous candle and close here down. So it will be called as the dark cloud. It will be called as the dark cloud. So this will be a strong downtrend for the market. And let's find out this pattern inside our MT5. If we find out a classical example of this candle, so yes, we had exactly find out one. So not a proper classical one. No, this is not gonna be the classical one. Okay, so we have, as we told, we have to train our eyes. So more we practice, we will learn these patterns more. So let's try to find out one. And here we can see right now. Here. So market was in a downtrend. The price has little bit started below and it crossed the previous body and closed above, and the market has gone up, 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 up. So we are in a 4 hour chart frame. So it has actually gone very high volatility of 1 2 3 4 12 hours, 16 hours. It has gone up exactly. If we enter after this candle, so we are getting a 12-hour upside direction of the candlestick movement. So yes, it is a good entry candlestick pattern. So this was a piercing pattern. Now in this way we had covered all hours, two candle forming double candlestick patterns we had covered out. Now let's talk our this one is the dark cloud exactly which we was talking about. So we have, this is exactly the opposite of the piercing pattern. Now we will be covering our three uh, candlestick forming patterns. So it should be generated, it should be formed by three candlestick at a time, and this will be good for our understanding the market. Also, this three candlestick pattern is a very good example for the long-term entry or very high volatility entry. So the famous one is the three inside up, three inside down, White Soldier and Black Rose. It's my favorite, and then Morning Star and Evening Star. So let's continue this with our three inside up chart. Now we'll be talking about three inside up chart. So how it will be forming. First, the market should be in a downtrend exactly. After that, where the price has been closed up bullish candle should be forming, and the price where the second one bullish candle has closed, exactly a third bullish candle should be open, and it should completely close above the second bullish candle. Then it will be considered as a three inside up pattern. So this candlestick pattern is a highly important reversal outlook of the market. Market will be reversed for a long term, and this is a good opportunity inside uh, entry. This is a good opportunity to make entry inside the market, which will be now. Let's check this one in our MT5, and let's see if we find out this candle. And so it should be formed in a long trend, so it will be considered as a high probability trade entry. So if we find in a long trend, it will be good. We had find out here. So market was a downtrend. It could not be the classic one. Market has opened here, and yes, it is. So market was in a downtrend. The price where it closed a bullish candle has opened, and the second bullish candle has exactly opened above the third candlestick, but it has closed above the second one and also the first one, and the market has gone for the long-term upside. So it is a very strong candlestick pattern. If we recognize, if we train our eyes to find out this one, it can give you a good entry for the market. Now let's find out the another candlestick, and going further. So the similar one is the three inside down, which is the opposite of the three inside up. The same way the market should be in a uptrend. The first candle should be bullish candle. That second one will be generating where the first one has been closed. The second one should be open and come down. And the third one candle should be start with the previous close and should be closed below that. So it will be considered as the third inside three inside down, and it is also a strong bearish outlook for the market. Let's find out in the market if we got this candlestick pattern. So exactly we had find out here. So market was in a uptrend, and when we see here, market was in a came down, again gone up. So one candlestick here formed, one bearish one has formed, come down, and the second one has formed and closed below the first one, and the market has continue further. But it is actually follow for the short term. Yeah, it not follow for the long term. So let's find out in a long term position the same pattern. So it can be a good example for the long term. Market has gone all the way up. Here the price where the first one closed, the second one has started and closed below. The third one has started with a kind of Marubozo, you can see here. So it is another example of Marubozo which show the trend continuation in the downside. So this is a two candlestick confirmation that the market has choose a downside trend. So we are in a 4 hour chart. So it is exactly a long trend entry for the market. If we enter after this candlestick forming, we had exactly a 40 pips, 50 pips opposite side direction. Market has tried to go up, but again market has came down, and 136, 137 pips gone down. So it was a good entry for the market. So this was the three inside down example. Now going further with other candlestick. So this one is very favorite for me because so this one is a very favorite for me. It is constructed with a three candlestick form, and every candle should be bullish candle, and every candle should be one above other. So the first one candle has turned close, then the second one should be open and it should close the previous one, and the third one should open and close above the previous one. It will be called as three white shoulder. And this shoulder has a high volatility trend entry conditions. Had a very good volatility arise once this three white shoulder exactly form inside the market. Market has a high volatility arise for the short term or could be a long term as well. So let's find out this is easily available inside the market. If we can see here, first candlestick is done, the second one above one, and the third one above one. After that, market has gone all the way up. This was a nice entry for the market. It is a 4 hour candlestick chart. If we make an entry after the third one, so still we had got a 126 pips profit, which is a high, could be considered as a high profit for the market. Also a great classical example here. So once the first one done, second one came, second one is done, third one is came, but one above other, and the price after that has gone all the way up. So this is another example here. This is a very favorite for me. So here, for the first one is done, the second one came, the second one is done, the third one came, and the price is still gone up, came down a little bit, gone up, but it shows a high volatility entry. Exactly if we enter here, so it's go up and still it not cover our entry point, still we will be in profit, then still it's go up. So it is a very good profitable entry for the market. So this one is very much favorite for me. The next one is the opposite of three white soldier, which is the three black crows. The opposite same with like the three black soldier, but it should be a bearish candle. The first candle should be generating, and the second candle should be starting as same price where the previous one is closed, and the third one should be starting the same where the previous one is closed, and after that market will be in a huge volatility. The market will be continuing for the long term, or at least a short term with a good profit. Market will be, so let's find out or try to find out. So we exactly got here. The classical example is here. The first one generated, the second one is generated, and third one is generated. Market has gone down, 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 down. Now, just give a little bit attention over here. So there you can see. So if you could see here, there is a two types of candlestick confirmation. The first one is the three inside down, where the price was open, the second bearish was started. So the price where the bullish one closed, the next one bearish candle started and closed below that, and the third one is started and closed below that, and again a candle started and closed below that. So this is a two candlestick confirmation that market gonna be down. One is three inside down and one is three black crows. So together it has become a high probability trade entry for the market. If we train our eyes like that, so we can exactly make a good profitable entry inside the market, which will be a good profit for the forex trading. Let's see here. So price was chasing down and the one candlestick form. The second one is form above that and third one is form above that, and the market chased a good upside. If we can see, so it is also example of three inside up. So this is a two candlestick pattern confirmation, which will be the first one. The first one is three inside up. Sorry, the three pattern confirmation. So the first one will be three inside up, first, second, third. Sorry, first, second, third, and again the three white soldiers, first, second, third. So two types of confirmation at the same time if you make entries. So from here to here you scalp the market with a good profit. So this could be a good profitable trade entry and exit as well if you follow the same candlestick to make sense for the exit. So this was the three black crow we had studied. Now going further and find out three morning star and evening star candlesticks. So it constructed by three candlestick pattern at the same time. So what will be the design of this candle? The first should be a bearish candle. The second should be a small, tiny, or a medium-sized candlestick, which should be starting with the same where the market was closed. The third one should be above the second one and should cover the half of the body of the bearish candle and close above that. Similarly, in the bearish one, it should be in an uptrend. The first one with a large volume bullish candle, high volume bullish candle, and the second should be a bearish candle where the market was closed. It should be open over there and should come down. The third one should exactly cross the halfway body of the previous third one candle, which will be the bullish one. It should cross and close after that. So for the more confirmation, we can wait for the third candle also, and then we can make entry. So it will be a good trending entry, and it will be considered as a morning and evening star pattern. Let's check this one inside our MT5 platform. So, so if we can find out over here, so as I told you, we have to train our eyes. This is the only way to make here a trade, entry and exit. So yes, this is example. This is a classical example over here because my eyes is trained so I can see the chart and can find out. But if you practice a lot, so you can exactly find out lots of candlestick patterns. So what you have to do, you have to open a chart. You have to check how many candlestick you are finding in a one chart at a time, and then you have to scroll down the chart and again you have to challenge yourself how many candlestick you are finding. So in this way you can exactly you can try to accumulate more patterns and you can memorize more patterns and you can make a good entry trade. So the market was chasing a downside. The first one has created and the second one is above one and close the half of the body and close above that. So this become a example for the entry, and if you has make entry, so it has gone up and long term up. So of course, if you want to make a safe entry, wait for some couple of more patterns to come and then you make a good entry. So uh, this way you can wait for two types of confirmation at the same time and which makes your entry good. So yes, nothing is confirmed inside the market. No one can give you 100% profitable strategy. More, however, we learned, however, we had check the market, there will be still missing something, data will be missing. No one can consistently analyze the market for the long term. And as because this market is huge, there are so many factors controlling the market, which is technical factor, which could be a fundamental factor, which could be a news factor as well. So anything could change the market, the trend entry, and you can trap you could be a trap inside your entry. So always you have to understand, you have to enter the market with a good risk management. If you not do the risk management entry, your entry is not exactly good, because the risk management is the only factor which works. And you have to understand that the more you are taking risk, you are earning more money, but always the risk factor will be there inside the market. So you have to exactly follow the risk management. The risk management will should be, your risk should be one and the reward should be two. So risk is two, reward should be, your analysis should be one risk and double reward. And we will be making more webinar further to make you a more risk management. You have more strategies we will be giving you to make your trading entry and exit with a good risk and reward management. So we will be back with the other webinars in the next upcoming week. Before that, I want to wish you a happy new year, because we are now going to enter in 2019, and I hope you will be making your career 2019 good for forex market or financial market, and you will be learning and enhancing your potential. You will be finding out your ability inside the market. You will be getting the more and more potential inside the market, and you become a good trader. This will be a very wish for me. And all the best. Make a good safe entry and exit trading. And thank you for being with us in this webinar. And I really appreciate, thank you so much, ABFX, to make this webinar possible. And if you want to join us, you could go ahead inside our website and could register with a account and start trading. So before that, you practice a lot with the demo account and start learning, because the learning is the way to earning inside the forex market. Thank you so much.